Welcome everyone to our live Q&A session. My name is Natalie and I am joined here today with Dmitry. He will be answering all of your self-directed and solo 401k questions. If there are any additional questions that come up, please type them up in the Q&A chat area. We will definitely be able to answer them today. But in the meantime, our next live Q&A session is going to be on Monday, August 14th at 11 a.m. Pacific Standard Time. So if there are other questions that come up after today's session, feel free to register and submit your question. Even if you don't have any questions, just register and we would love for you to join us. But before we start answering the questions, I'm going to give a brief introduction about Dmitry. He is the founder and the president of Sense Financial Services LLC. We are a boutique financial firm specialized in self-directed retirement accounts with checkbook control. Back in 2000, he started his career in financial planning and real estate investing. He is a licensed California real estate broker, a real estate investor, and a private lender. He's mentored thousands of investors and taught hundreds of investment and financial planning seminars. So thank you, Dmitry, for joining us today.
Thank you, Natalie, for the introduction, and thank you guys for joining us. Can you see my screen, Natalie?
Yeah, I can see you, yes.
Okay, great. All right, well, let's jump into questions.
Great. Okay, so the first question is from Seth. He's wondering, is it better to secure non-recourse loans to buy 3 properties or pay cash for just one?
Seth, good question. Should you just use cash to buy a single property or actually obtain a non-recourse loan and buy 2 or 3 instead? You really have to look at the numbers. I'm not sure if I can answer specifically your question, but generally speaking, I can answer. Just generally speaking, you use leverage, so your overall return will be bigger and greater if you use a non-recourse financing to obtain 2 properties instead of 1. So I think overall you will be ahead by doing so.
Okay, next question is from Alan. He wants more information on moving from one self-directed IRA to Sense Financial self-directed IRA, and his amount is $50,000.
Natalie, go ahead and turn off your camera. Okay, thanks. Alan, let me read the question again. More information moving from one self-directed IRA to Sense Financial self-directed IRA. Once you become a client of Sense Financial, you will be assigned an account manager that you're going to be working with, and your account manager will guide you through the steps. So there are several steps involved, and as far as the movement of the funds, it has to be done via direct rollover. So the funds will go from your existing IRA custodian to the new IRA custodian. It's not a taxable event. Typically, that can be done in about a week or 2, but it's a simple form, just a normally 1 or 2 page form that will be completed, submitted. It will be signed by you, and it will be signed by the new IRA custodian, and then submitted. The new custodian will send it to your existing IRA custodian, and once received, the existing IRA custodian will process the direct rollover and send the funds over. So it's pretty straightforward.
Okay, next question is from Brian. How to set up a child for a Roth IRA and or self-directed IRA?
Well, Brian, that's a good question. You certainly can set up a Roth IRA for your child. Whether it's can be set up as a self-directed or not, that's a secondary question. It depends on what the balance is and what investment options are. If you're just starting out from scratch, you can contribute about $6,000 a year to an IRA. So that might not be enough to do a self-directed one, depending on the investment options you have in mind. But your child needs to have earned income in order to set up a self-directed or Roth IRA. It's a great way to do that. If you own a business or own some real estate, you can actually hire your child to work for you, do some kind of work, whether it's some kind of administrative work, helping you in the office, or maybe even helping you with the property. And that's not, by the way, cannot be a property that your retirement account owns. Has to be properties that you personally own. But if you do that, then you can pay your child for his or her services, and then that income can be directed towards Roth IRA. So it's really a question that you should be discussing with your CPA, because you do need CPA guidance on that. But it's certainly a great idea to shift some of your income that will help you minimize your tax liability, and then your child is not going to pay any taxes on that small income, and it can be directed towards Roth IRA of a child. So good thinking.
Okay, next question is from Ben. I am buying a boat that I will lease to a company that will pay me monthly to use the boat, and then I will sell the boat after 2 years, and the proceeds would go back to the 401k. So the transaction would be very similar to buying a house in the 401k, renting it out, and then having all the proceeds go back to the 401k. I'm wondering if this is allowed. I'm thinking I would title the boat in the name of my 401k and then set up a bank account, and the monthly proceeds from the boat lease would flow back into the 401k.
Ben, to answer your question, yes, technically that is possible. You can invest using a self-directed IRA or self-directed 401k in virtually anything. And the only restrictions are collectibles, and for an IRA, also life insurance contracts. So those are the only investments that cannot be done with your retirement account. So you certainly can invest in a boat and then lease it out to a company that sublease it to other clients. But a couple things to keep in mind is number one, it has to be arm's length transaction, meaning that you personally cannot touch the boat, you cannot deliver it, you cannot do any maintenance on it. So it has to be completely hands-off, which seems to be the case here. Number two, you cannot, neither you nor your family cannot benefit from that boat personally. So you can't use it personally on the weekend. It has to be just for investment purposes only. The title to the property has to be taken in the name of an IRA or a 401k. You mentioned setting up a bank account for that. You don't need a separate bank account for it, because you should already have a bank account for your 401k established. However, something to consider is that owning a boat like this directly in your IRA or 401k will expose you to some liability. So you may consider setting up a special purpose LLC that either your IRA or your 401k will own, and then the LLC will own the boat respectively. So that's something to consider. That special purpose LLC needs to be set up in a certain way to be IRS compliant. So it's not a DIY task. You need to work with an attorney. You can contact our office. We can give you guidance on that. And then last but not least is you want to check with your CPA on the designation of that income, because as long as the income is passive, then there is no tax consequences for your retirement account. But if income that that activity generates is considered business income, then that income will be subject to unrelated business income tax. So this is beyond my area of expertise. I'm not a tax person, but you do want to confirm with your tax person if In fact, that income is passive and will be exempt from UBIT tax.
Okay, next question is from Margaret. Are there any ways to take out a loan from my self-directed IRA?
Thanks, Natalie, and thanks, Margaret, for the question. Before I jump to answering that, I just want to encourage you guys who are on the call and listening. If you think of any questions, you go ahead and type them in the Q&A or in the chat, rather, session of the, and we will answer them after we go over the questions that were submitted ahead of time. Back to the question, let me read it again. Are there any way to take out a loan from my self-directed IRA? Well, unfortunately, Margaret, there is no possible way for you to borrow from an IRA. There is simply no mechanism like that. You can take a loan from the 401k if you're eligible for that, but from an IRA, it's not possible to take a loan. The only way for you to access the funds is to take a distribution, and early distribution will be subject to penalties as well as taxes. And IRA are not designed to provide you with any benefits today. It's for your future benefits.
Okay, next question is from Coulter. What are the kind of investment options out there for 401k funds?
Well, there are unlimited investment options virtually. As I mentioned earlier, IRS doesn't give you investment options that you can do with your IRA or 401k. Rather, IRS gives you a list of the items that are prohibited, that are not allowed. And those are, again, collectibles. You cannot invest in collectibles with your IRA or 401k funds. And then in addition to that, you cannot use your IRA to invest in life insurance contracts. And then IRS defines a disqualified person, which is yourself, the account owner, spouse of the account owner, your parents, grandparents, kids and grandkids, and their spouses. So immediate family members are disqualified, and your retirement plan cannot engage in any transaction with a disqualified person. Other than that, it's totally up to you. You can invest in virtually anything. So some of the common investments I can name, our clients invest in real estate or some, whether it's owning directly or rental property. By the way, rental property can be in your city or state. It can be in another state, and also it can be in another country. We do have clients who invested in South America, in Mexico, in Canada, in India, Japan, Europe. So you certainly have that ability. You can invest passively into syndications, where you just one of the many investors. You can do private lending, use your IRA or 401k as a bank. You can invest in mobile home parks, self-storage facilities. You can invest in private placements. You can do trust deeds, tax liens. You can invest in a private business that is not publicly traded. So again, there is really unlimited list of options, and I'm not going to be able to name that for you, but remember the restrictions. That's what you got to keep in mind, the restrictions.
Okay, next question is from Joseph, and he would like to ask about maintaining eligibility in his solo 401k when hiring staff.
Well, Joseph, solo 401k designed for those people who are self-employed or own a business. So you and your spouse can be involved in a business, but once you start hiring employees, then your eligibility will be in question. You can have part-time employees working under 500 hours a year, but once they start working more than that, you will no longer be eligible for the solo 401k, and you either, if it's maybe some kind of a short-term project that you do need to hire somebody, then there is a solution for that. You can freeze your plan maybe for a year or two, and then again, when the employee is gone, you can unfreeze that. But if you start hiring full-time employees, then you will have to terminate your 401k and either move that to an IRA or switch your 401k to a full version of the 401k that is able to accommodate the employees. Because by law, if you have employees, you have to offer them 401k benefits. But if that's your situation, we certainly encourage you to talk to us ahead of time if you're just considering, and we can really look at all of the details. If you do have independent contractors, though, that then those are not considered employees and will not affect your eligibility.
Okay, we do have a few more questions left. So again, if there are any additional questions, feel free to type them up in the chat area. But this question is from Terry. How do I end my solo 401k when I retire?
Well, if you stop your business, you can keep your 401k for as long as you wish. If you have assets, and you can continue to invest, you just have to maintain the business, maintain the eligibility. But if your eligibility stops and you want to end your 401k will have to be terminated. So there is certain process that needs to be followed. Just reach out to us. We'll process the plan termination paperwork. We'll submit proper reporting to the IRS, and then you can distribute your 401k, or take a distribution to yourself or move it to an IRA. But the process is pretty straightforward. Just be sure to contact our office, and our team of experts will guide you.
Okay, this question is from Skip. How do I set up a checkbook IRA?
Skip, a checkbook IRA is just another name for IRA that owns a special purpose LLC, or the alternative to that is a special purpose trust. And it's a 4-step process. Again, you will be working with our team of experts who will guide you on that, but the 4 major steps are: number 1, the new custodial IRA will be established that allows alternative investments such as special purpose LLC. Step 2, you will do a direct rollover from existing IRA to the new IRA. Since it's done as a direct rollover, there is no tax consequences. Again, typically funds can be moved within a week or so. Step number 3, special purpose LLC or special purpose trust is created. And then a final step is the funding of that special purpose LLC. The new checking account in the name of the LLC or a trust will be established. The instructions will be given to the IRA custodian to buy 100% units of the LLC, and the funds from the IRA custodial accounts are transferred to the LLC checking account. And once that done, then you as a manager of the LLC will have checkbook control over those funds and be able to make the investments. Overall process to set up a checkbook IRA takes about 3 to 4 weeks. Process to set up IRA trust takes about 1 to 2 weeks. But again, we will assign account manager for you to work with, and we'll guide you through the steps fairly quickly and efficiently.
Okay, our next question is from Doris. How much does one need to make to qualify for a solo 401k?
Well, Doris, the qualification criteria for the solo 401k is as follows. You got to meet 2 requirements. Number 1, you have to have legitimate business or self-employment activity that generates earned income. And number 2, you cannot have any full-time employees working for your business. There isn't a dollar amount, minimum dollar amount. In fact, you can start a business, and many small businesses, they don't produce much profit in the beginning, so it might take some time. So again, there is no dollar amount, but you do need to have that activity with the intention of generating profit. If you do have that in place, then you can establish solo 401k. However, to contribute to a 401k, you do need to have earned income. So the contributions are based on the income. But income is not necessarily required to establish a plan. So you can start the business today, and you can open a solo 401k today. You got to make sure that that business will produce income later on.
Okay, so those were all the questions that were submitted. We do have a couple that were entered in the chat. The first one is from Shepard. If my solo 401k made an unsecured loan to somebody for 60K, but I only received 10K, the person has been long-term unemployed and I haven't received a payment in over 6 months. Is it possible to forgive a loan? Do I need to do extra paperwork to stay compliant?
If I understand you correctly, you made looks like unsecured loan to somebody, and they only made a partial payment. And no, you don't want to forgive the loan. Remember, this is not your money. You have a fiduciary responsibility to the 401k. Number one, it was not a very wise move to make an unsecured loan. I will never do that personally using my 401k funds. You do want to make secure loans, but if you made unsecured loan, then it's your fiduciary responsibility to look after the 401k, not after the person who's unable to make. So you need to make all the effort possible to recover the funds. Not forgive the loan. Those are 401k funds again, so you need to make all the effort to recover the funds, including legal efforts.
Okay, the next question is from T. I have heard that self-directed IRAs are in the gray area with the IRS. What are the risks to open a self-directed IRA from the perspective of getting audited or otherwise having the IRS come down on me?
The self-directed IRAs, in and of themselves, they don't present a gray area. What may present a gray area is what you do with that IRA. Because remember, with self-directed, whether you're using a checkbook IRA or self-directed 401k, you're in control. So you have the power. And with that power and control comes responsibility. So if you're not following the rules, then you can certainly mess something up. So it's important that you understand the rules and you follow the rules. And we're here to guide you on that. And I often say this to my clients. I'm going to say it again. If you're about to do something and if you're not certain whether it's allowable or not, then ask a question. Email me. All of my clients, they have my number. You can text me your question. You can get the answer pretty quickly, but don't do a transaction and then come and ask me a question about that. If you're not sure, talk to me before doing that. We'll happy give you guidance and answer your questions. But again, just in of themselves, self-directed IRA is not any kind of a gray area or doesn't present any risk. But what you do with that certainly can lead you into a gray area. So again, make sure you understand the rules. And then Shepard asked a follow-up question to the previous question about that unsecured loan to somebody. Can you restructure the loan? You certainly can. If that is a way for you to recover the funds, then yeah, talk to the borrower and see if the loan can be restructured, maybe changing the terms so that you can collect what's owed to the 401k.
Okay, well, those were all of the questions for today. So that brings our session to an end. Thank you, everyone, for joining us. Our next Q&A is going to be on Monday, August 14th at the same time at 11 a.m. Pacific Standard Time. So if you have questions, don't hesitate to ask us. And if you don't, you can feel free to just join us. And hope you all have a wonderful day.
Thank you for joining us. Nice questions, intelligent questions. Enjoyed answering them, and look forward to you joining us next time and giving me some more great questions.